Hello everyone, and welcome! In today's video, we will explore an interesting topic that has been in financial news lately, the potential weakness of the US dollar in the next 18 months. We will analyze how inflation, the Federal Reserve's policies, and the dollar smile theory could affect the currency's value and what this might mean for investors. So, make sure to stay with us until the end. Inflation and interest rates. Let's first review the recent context of inflation in the United States. In February 2023, inflation as measured by the Consumer Price Index, CPI, rose by 6% year over year. This data came ahead of the Federal Reserve's 25 basis point rate hike in March amid the Silicon Valley Bank crisis. According to Stephen Jen from Eurizon SLJ Capital, U.S. inflation is expected to continue declining at the same pace as in 2021 and the first half of 2022. In this context, Jen argues that both the Fed and the European Central Bank are close to or have already surpassed peak monetary tightening, and interest rate cuts are looming. The Dollar Smile Theory. The Dollar Smile Theory, created by Stephen Jen, suggests that the dollar strengthens when the U.S. economy is either strong or weak but weakens when growth stagnates. The theory can help us understand how different economic and policy factors, such as inflation and interest rates, affect the value of the U.S. dollar. According to Jen, declining inflation with a soft landing should push the dollar into the deep trough of the dollar smile, which could result in generalized dollar depreciation this year and more next year. 3. What does this mean for investors and financial markets? A weaker U.S. dollar can have several implications for investors and financial markets, both in the U.S. and abroad. Dollar-denominated assets, such as U.S. stocks and bonds, could be negatively impacted by the dollar's weakness. International investors may reduce their holdings of dollar-denominated assets due to currency risk. On the other hand, U.S. companies that earn revenues overseas could benefit from the dollar's weakness, as foreign currency revenues would translate into more dollars. Additionally, investors may seek refuge in assets that maintain their value against the dollar's weakness, such as gold and other commodities. These assets could experience an increase in demand and, therefore, in their prices. 4. Potential investment strategies in a weak dollar environment. Global diversification. Investors may look to diversify their portfolios by investing in assets denominated in other currencies and international markets to reduce their exposure to the U.S. dollar and benefit from opportunities in other economies. Investing in companies with international exposure. Shares of U.S. companies with a strong global presence and generating revenues in foreign currencies could be an interesting option in a weak dollar environment. Safe havens and alternative assets. Investing in gold, commodities, and other alternative assets could be an effective strategy to protect the value of investments against the dollar's weakness. Foreign currencies. Investors might also consider investing in foreign currencies directly or through funds that invest in currencies to take advantage of the potential appreciation of these currencies against the dollar. Factors to consider and risks. It is essential to remember that economic predictions and analyses, such as the dollar's weakness in the next 18 months, are subject to uncertainty and changes in market conditions. Investors should keep an eye on the Federal Reserve's decisions and policies, as well as other economic and political events, as they can have a significant impact on the dollar's value and ultimately on investments. Diversifying and balancing the portfolio is crucial to mitigating risks and maximizing opportunities in different economic and market scenarios. In summary, the potential weakness of the dollar in the next 18 months, driven by declining inflation and the Federal Reserve's policies, could have a significant impact on investors and financial markets. Understanding the dollar smile theory and how it could affect the value of the U.S. dollar is crucial for making informed investment decisions in this changing environment. We hope this video has provided you with valuable insight into how the dollar's weakness could affect investors and investment strategies in a weak dollar environment. If you enjoyed this video and would like to learn more about financial and investment topics, don't forget to subscribe to our YouTube channel and share this video with your friends and family interested in finance. Until next time!